Hey guys, so I'm here with another trade breakdown on Euro Australian dollar, bullish trade that I took this week using my strategy of demand and supply. I took the buy position using this key demand level. If you check my previous trade breakdown, I also had a trade on Euro just last week, buying at the same demand level. So the rule of trading using demand and supply zones is as long as price has never broken the zone. Like here, we had marked our significant higher highs and higher lows. Then each beginning of the impulse move use a demand zone. So we have a demand there, demand there. So this demand, price came back last week, gave me my first setup here, came back at break even because I was targeting a narrow 3 and using my stop loss of 45 pips, my target was about 135. Then we got a second setup at the same demand zone, which finally went to our target. So starting the new week, price went up and came back down to the same demand zone. Since the zone has never been broken, it is still valid, meaning as long as we can get a significant confirmation pattern, which is a W, most of the times we can get into a bullish trade. So when price came back to the demand zone, I was looking for a significant W pattern. And sometimes you can spot very big W patterns, but I'm always keen on looking for the specific immediate pattern that happens, because if you go for a very big W pattern, you'll end up getting your entry very late. And the whole idea is to capitalize on the fact that price is likely to react, with a bullish move from the demand zone. So you want to get the reaction as soon as possible. You don't want to get your entries up there very late. So when price struck this demand, if you can start to draw from that point, you'll realize we had a drop, we had a bullish push, then we had a drop, and we had this push, which if you can zoom in, closed above this line, which I consider my neckline. So I come and mark the middle part. I always put my neckline at the body. I don't use the wicks. So after getting the confirmation of the W pattern, I wait for price to come and retest the neckline for me to buy. So in short, I put a buy limit. But this confirmation happened at 10 p.m. and by 11 p.m. it had not yet retested. So I do have a trading rule whereby I don't take positions past midnight. So between midnight to 6 a.m. I don't take any trades. So my trading day starts at 6 a.m. and closes at about 11 p.m. Simply because past midnight you can get a little bit of bad spreads, which might not work well with perfect execution of your entry. It's also a way of me to just limit over trading so that I have specific times where I take setups, and past that time I don't take a trade. So even if I wake up let's say at 2 a.m. and I find the market has gone back to my neckline, I won't take the trade because it's not part of my trading hours. So that means by the time I was sleeping, I never put the buy limit. Now, in case I wake up in the morning from 6 a.m. and I find the market has not gone at least 50 pips, I can still take the trade. Now, by 6 a.m. when I wake up, you want to check what was the farthest point that the market went to. Now, from the farthest point to the neckline, the market had done maximum of about 30 pips. So that means it's still a valid entry because it hasn't gone at least 50 pips. That's just part of my trading rules. Because the entry was still valid, I placed my buy limit at the neckline. Now, this means from 6 a.m. when I woke up, the trade will only start running if price goes and triggers the neckline. In the case that price doesn't go back and trigger the neckline, I'll consider that a bad trade which did not respect my strategy. So I don't force setups. I placed my buy position at that point. Luckily, price came and triggered at about 8 a.m. And if you check, the trade went further and hit my take profit. My stop loss was 45 pips. It never went anywhere close to reaching my stop loss, but after a few hours it went to my target. So from the opening time to the closing time, it took about 13 hours. And that's it for the trade breakdown. The advantage of having a proper strategy that you've backtested is you don't have to keep switching from one strategy to the other. Like if you check my previous trade breakdowns, you'll find so many trades that I've been analyzing using the same approach every time. It's not always that the market will respect the strategy. Sometimes we'll have stop losses and break evens. It's very normal. But what gives me an edge here is the risk to reward of 1:3. So that anytime I find a good trade, I make 3 times what I lose on a bad trade. And this is what gives me the advantage, of course, apart from having a proper strategy. Which brings me to the end of this video. If the breakdown helps you, be sure to like the video and subscribe.